Debt consolidation, as its own, is taking multiple debts. They can have different interest rates, different minimum payments. So you could have three different credit cards, different interest rates, different minimum payments, different lenders.
You wouldn't recommend it.
Mhm.
Why wouldn't you recommend that in today's time?
Yeah. So even with just a general debt consolidation.
Hey, what's going on, guys? Calvin Russell here, CEO and founder of 850 Club Credit. Hope everyone's doing well today. Listen, we got yet another special guest speaker that we're bringing to you all today. And listen, we want to make sure that you have your personal finances in order. We always talk about credit, and this is still about credit, but as it pertains to quite a few things we're going to touch on today. So, including debt consolidation, using your credit cards the right way, and a few other things as well. But either way, you won't be hearing from me too much during this entire conversation because I want to make sure you guys hear it directly from the source. All right. So, of course, without any further ado, we're going to be introducing you all to someone who knows personal finance very well. She actually teaches this a lot on her personal YouTube channel as well. And without further ado, I want to go ahead and introduce you all to Layla. Layla, can you hear us okay?
Yes. Hello, everyone. Thank you for having me.
Absolutely, absolutely, Layla. So first off, I want to say thank you for actually carving out the time away from your own channel and your own, business as well, just to stop by and drop some gems on us today. So thank you for doing that.
Of course. I love what you have here. It's very cool.
Oh, there we go. See, she's starting off right already. All right. So, of course, listen, I know we're going to jump right into it. Debt consolidation, things of that sort. But here's the thing. My audience is real chill, but they really love to learn about these things. Tell me about what made you get into personal finance altogether.
My debt is where it all started. So
Okay.
I did not make great financial decisions when I was a teenager, like many people. We're so young. When we go
Yeah.
into college, I took out student loans, I had credit card debt. So once I graduated college, I had over 82,000 of debt amongst everything, car, student loans, credit cards.
Wow.
I owed my sister money. So that's kind of where everything started. I really didn't like the feeling of I was low income at the time too. I was fresh out of grad school, barely
Yeah.
making money. I couldn't afford to pay my debt, couldn't afford to pay where I was living. All of these things, just all these bad financial things were happening and I was stressing out. So I'm like, okay, something has to change. So I started tackling my debt first. That was my main focus. And I paid
Yeah.
off the 82,000 in about 5 years. And in 2019, I started documenting my journey on YouTube. And that was a good
Mm,
source of motivation, held me accountable. It was fun. I was doing it anyway. And then I
yeah.
was able to monetize it. So it all worked out.
There you go. There you
Yeah.
go. And see, I like how you shared that because, essentially you have gone through what a lot of people have gone through, especially like, coming out of college, student loan debt. I think a lot of people got student loan debt. And
Mhm.
so,
Yeah.
and sometimes that really it gives people a lot of anxiety because they feel like they don't know exactly, what to do. And, so how did you climb out of that? Just, I know, of course, it wasn't just one or two things, but how would you able to actually put that strategy together for yourself?
So first I kind of just threw all of this financial information at myself.
Yeah.
It wasn't even information, it was Dave Ramsey. That's where I started. I'm not a
Yeah.
huge fan of Dave
Yeah.
Ramsey. His content is just like entertainment at this point, but at the
Mm.
time I had a long commute, so I was just listening to Dave Ramsey just for keeping me motivated, and I did realize I could pay
Yeah.
off my debt faster because I thought it would take me like
Mhm.
10 years.
Real quick, if you're looking for a way to lower your car payment with a soft pull, this means no effect on your credit score to see your interest rate in terms. If you decide to move forward, then they will do a hard pull. And they have competitive interest rates. And this is something that you can get an instant decision on right away. To learn more, scan the QR code or click the link in the description below. Now back to the video.
And I
Yeah.
was listening to him and I was like, "Oh, I could probably do this in 4 years or so." That really kind of pushed me to take it more seriously, and it was
Yeah.
just like a way to learn a little bit of different strategies with paying off debt. I think the main thing though, there were like some other podcasts and YouTubers that I listened to as well that was
Yeah.
definitely motivation, but working on increasing my income honestly was one of the biggest things where it's like, you can only cut so much from your budget. It gets to a point where it's like, okay,
Mhm.
I'm cutting everything and now what? You have to increase your income. So that was
Wow.
a big one for me. To actually using my degree is where I went next. Getting a
There you
job.
go. There you go. And
Yeah.
and you said something that's really key. You talked about just making more, and it's
Mhm.
okay to increase our income because I mean it's only so much you can cut as
Yeah.
prices obviously keep going up, so that
Yep.
plays a major role as well. So let's talk about a couple things. I want to talk about debt consolidation first because I feel
Mhm.
like a lot of people have a lot of people have debt, and I don't know. Obviously, some people know about Robert Kiyosaki. We know about good debt and bad debt,
Mhm.
and a lot of people have just a lot of bad debt. And so, with debt consolidation, I think sometimes people get this confused with like debt relief or
Mhm.
like one of those companies or something like that. What should people know about debt consolidation?
So I guess I'll kind of just define what it is or just describe what it is. So balance transfer is one thing that is a form of debt consolidation, but that's a little bit separate. So debt consolidation as its own is taking multiple debts. They can have different interest rates, different minimum payments. So you could have three different credit cards, different interest rates, different minimum payments, different lenders. And then you go and get a personal loan or do a HELOC, so home equity line of credit. And that one loan that you have, now you're going to pay for those three different cards. So instead of three different debts, you have one at one minimum payment, one
Mm,
interest rate. So it kind of simplifies things and it can help you to save money on interest, just depending on your situation.
got
Hopefully that
you.
makes sense.
Yeah, no, it most definitely makes sense. So essentially, you have debts, and then you're able to consolidate all of those debts into one particular payment. Now, are you able to do this like with a bank, or is there like like loan companies or something like that that a person should be looking at?
Yeah. So if you're doing a balance transfer, that's one thing. That is something you can absolutely do with a bank. You would get a credit card, and a balance transfer is you get a credit card, or maybe you already are with a bank and
Mm.
you get an offer for a balance transfer. So then you get 0% interest for X amount of time. And sorry if I'm jumping the gun here.
No, you're good. You're
We'll
good.
talk about that later. But
Yeah.
with that credit card with the 0% interest rate, you can cover one of your credit cards or debts with a higher interest rate and then have 0% interest or a lower rate for a set amount of time. So that's
Mm,
one way you could get an offer through a bank that you're already established with or get a different credit card. You can do a Google search of like best personal loans and find which one would work best for you based on your credit score, based on how much you need, the interest rate that is being offered to you. And then there's some good websites that consolidate that information, like NerdWallet, or I think Bankrate is another one, and they'll
nice.
put different options for you to choose from, and then you would apply through the website. So like SoFi is a common one, for example.
Got you.
Mhm.
Okay, got you. Okay, let's go ahead and dive deeper into the balance transfers. How did
Mhm.
you learn about balance transfers in general?
I did one myself when I was paying off my debt.
Okay.
So I can't remember how I first was exposed to it. It was probably YouTube, honestly. That's where I learned most of the things, or podcasts or
Don't we
something.
all?
Yeah, it's awesome. It's such a great thing that
Yeah.
we have YouTube. I love it.
Yeah.
Yeah, so it was probably YouTube or somewhere that I learned it, and then I did a balance transfer with, one of my student loans, actually, which I don't typically recommend.
Wow.
Yeah,
Okay.
so at the time, it felt like I was making a good decision. I think that student loan, because I had, like, 10 different student loans, different rates,
Yeah.
all under the same lender.
Wow.
So I did a balance transfer on one of, maybe it was 6% or something, and I was able to get a at the time, it was a credit card that was offering 0% interest for 12 months, which now these days they're
Mm,
like 18 months, 21
mm,
months, which is
yeah.
great. So I got 0% interest for the 12 months, and I was really stressing about that though, because I
Yeah.
wasn't sure I would be able to pay off
Got to
the
be able to
whole
pay it, Layla.
yeah, you gotta be able to pay it off, because what happens after the promo period is your interest rate is going to go to the typical interest rate, which is
Yep.
usually above 24%, 25%. So,
Yeah.
um, yeah, I did it myself. It did work out. I was able to pay it off, and it
Okay.
did save me money. But yeah, with student loans, it can be a bit iffy doing that.
Wow, I didn't even know you could do that with student loans. You
Mhm.
see, that's something I'm picking up here. Okay. See, this is why we brought Layla here to give us these life hacks. Okay. Uh, that's huge because, like you mentioned, especially with student loans, because a lot of student loans have different interest rates and things of that sort. I know for me, when I went to college, I think my student loan was at like 6%.
Mhm,
Luckily, I didn't stick around in college too long, so I didn't owe that much.
mhm,
But I didn't know, I never thought about that, taking a loan balance and then using the credit card, to actually do that balance transfer. But you
mhm,
also mentioned something too, how you said you wouldn't recommend it.
mhm.
Like why wouldn't you recommend that in today's time?
Yeah, so even with just a general debt consolidation with student loans, I don't always recommend that. That was something I
Yeah.
tried to do. I wanted like a just one interest rate, lower interest rate, and I got
Yeah.
denied for that. I tried to do that, and I'm so glad that was a blessing in disguise because
Yeah.
when the pandemic came around, we
Yeah.
did not have to make payments. Anybody with federal student loans, 0%
Mhm.
interest, you didn't have to make payments. That was huge. That was saving me thousands of dollars in interest and
Mhm.
along with many other people. But the
Yeah.
people who had private student loans or who did transfers, anything that was different from federal student loans, still had to make payments, still were paying interest. So that's why I don't typically suggest doing anything, any consolidation or balance transfers with student loans unless you're really confident you can, like things are all set because
Yeah.
there's different perks with student loans. You could defer them if you need to, you can
Yeah.
pause payments, all of that. So, and then pandemic, hopefully that doesn't happen again. But yeah, that was very helpful to have 0%.
Got you. Got you. Listen, this is why we brought Layla here. Let us know in the comment section if you guys are learning something that you did not know today. And of course, if you all want us to bring Layla back, let us know inside the comment section below. So now you've been talking about on your YouTube channel for quite some time. I watched a lot of your videos and you talked about using credit cards strategically.
Hmm.
And, because a lot of times people, they get credit cards, they don't know like how to use them a certain way. They just know they swipe and they pay them off. Like they know like the basics,
Hmm.
but what do you what's your strategy to essentially use a credit card the best way possible?
So before I explain that, I do want to say it's not for
Yeah.
everybody, that's for sure. I'm somebody who really enjoys personal finance. I am in the spreadsheets constantly. I don't mind juggling multiple accounts. So
Yeah.
having 12, 14 different credit cards doesn't bother me, but for a lot of people that's very overwhelming.
Yeah.
So it's definitely about finding what works best for you and I have found that. So with time, it's taken some time to get to the amount of credit cards that I have now and kind of what works best. But I really like to have a 2% card. So 2% back on everything. So if I'm going
Mhm.
to the doctor and I'm paying a copay or
Smart.
anything that you wouldn't typically get a larger cash back for, like you're not
Yeah.
seeing 5% cash back on those types of things, you
Yeah.
can use your 2% card. So I like to have that. I have a business credit card as well. That's 2% on everything. So that's a little bit different from other people.
Mhm.
I also like to get the most cash back on groceries. So I have an American Express that gets me 6% on groceries because that's where I spend the bulk of my money or consistently. I'm spending
Yeah.
most of my money on groceries. And
Mhm.
then I like to get some cash back on travel. And usually with travel cards, I'll open a new credit card to get a bonus. And it's the travel cards are always the best with the bonuses. They have huge, like, 80,000 points, which equates to like $1,000 worth of travel credit.
Yeah.
So yeah, it's just a little strategy to mix in there to save some on flights or an Airbnb, something like that. And then I have some cards that the bonuses vary by the quarter. So you'll
Yeah.
get 5% in different quarters on different categories. And I like those too because it'll be like sometimes you'll get a little bit extra cash back on gas or on
Yeah.
Amazon, Walmart, that type of thing. So just finding the areas that you spend the most money on, and that's where you kind of can start with a credit card after getting that like basic 2%.
Wow, that's pretty good. Because I've heard of course about. I mean, of course, my wife and I we have a cashback card, things of that. So I think that's becoming really common.
Mhm,
However, what I am noticing is a lot of people don't know that you have to have a certain type of card. Not every card is obviously going to give you that. What type
mhm.
of credit score should people shoot for, like the minimum, where they can start getting approved for those types of offers?
It's a good question. It's hard to say because it also
Yeah.
depends. I'm gonna say a general, like over 750 is probably ideal, 725, 750.
Yeah.
But I've also seen some people who have a higher score, but because they have so much debt or just
Mm,
maybe they have a bad payment history that's still on their credit report,
yeah.
they get denied for a card. So
Got you.
it really just depends on all of that. But anything in like mid 700s and above is usually like you're good to go.
Got you. Let's circle back to the debt consolidation
Mhm,
because I know that kind of ties into it too, right? Because, like, for example, if a person is not able to get a balance transfer credit card, because usually with credit cards, you do have to have, typically a higher score. If a person, let's say, let's say, for example, they want to get a debt consolidation loan, what do you think? What type of credit score or like minimum do you think they need to shoot for to get approved for something like that?
That's probably high 600s.
Yeah. Okay.
Yeah, I would say high 600s, and there's like I was saying before, if you go to those websites that kinda consolidate that data, and they'll put a range on there, like the person who would most qualify for this, it's not guaranteed,
Yeah.
then you can apply for that and feel pretty confident that you're going to get it. A good thing too is, I
Yeah.
don't know if you tell your audience about, like, Credit Karma, where you can
Mm,
see, like, what is suggested, you kind of pre-approve for certain loans.
yeah.
That's a good rule of thumb too, not guaranteed, but at least
Right.
they know your history better.
Yeah, and they can
Yeah.
see everything too, so it makes it
Mhm.
a little bit easier as well too. Too,
Definitely.
Layla, you see, obviously, you know a lot about this type of stuff as well too. Obviously, the economy has been different. Recently, interest rates are a little bit higher. Are you doing anything a little bit differently now than what you would do, let's say, a couple years ago, or is there some advice you would give to people like in today's economy?
Save your money.
Mm, okay.
Save, build your emergency fund is what I would say. I'm a financial coach, so I work with a lot of clients, and a large amount of them have been laid off. My boyfriend was laid
Mm,
off, his friend was
wow.
laid off, many of my
Man.
clients were laid off, like, I just keep seeing it happening.
Wow.
So yeah, just now, and I don't mean this to scare anybody, of
No,
course,
yeah.
kind of the reality of what's going on, and I think saving is a big thing. Just make sure that you can get through a rough patch if something were to come up. So, I think investing is great too, of course, but having a solid emergency fund where it's like you can easily access that money. It's in a high yield savings account. You can pull from it. I
Mm.
think that's kind of where I'm pushing a lot of my clients to as well. So
Oh, we're about to hold on. We're about to get a little deeper on that then, Layla. Hold on. So, okay. So now let's go ahead and break down to the audience because my mom sent me a book years ago and Dave Ramsey. And I think it was a total money makeover at the
I've
time.
read that. Mhm.
Yeah, pretty good book. And then that led to me going to the library and buying Dave Ramsey's Financial Peace, I believe it was. Yeah, it was
Mhm.
the green one. It was old. And but either way, I'm saying that to say some people may not know what an emergency fund is. They may have an idea. What is some of like I would, and of course, not trying to go too deep into obviously some paid advice, but that's
Oh,
we
that's
try to squeeze some of these gems
okay.
out of you real quick. So, but no, seriously, if a person wants to build an emergency fund, like what is there a number they should shoot for or a certain amount of months of, like bills or something? Like, how do you put that together and how should a person say, okay, this is the number I'm going for?
Yeah, that's always the big question. There's no right
Yeah.
answer,
Okay.
unfortunately. I think a good rule of thumb is look at your deductibles. So if
Mm,
your health insurance deductible is $4,000, $5,000, aim to save that. Or
mm,
if you're looking, it could depend across your insurance deductibles. If you have, usually a car insurance deductible isn't too high. It's usually the health
yeah.
insurance, or if you have pet insurance, anything that you have coverage on, aim to save at least that. So if something were to come up, then you can pay for that. Usually when it does come up, it's either with the car or health, or
Yeah.
job loss. Otherwise, you do need to look at your life, like the factors in your life. I think people who own a home, like it's actually you have a mortgage to pay for, and if something happens to the house, it's your responsibility. You should
Yeah.
have a larger emergency fund. If you have
Mm,
children, you should have a larger emergency fund. If you have a job that has a lot of layoffs, like tech jobs, certain things of that nature, probably have a higher emergency fund. If you have pets,
mm,
higher emergency fund. If your car is older, higher emergency fund. And I know that's overwhelming, but it's something that
yeah.
slowly you can build up, and it's really what makes you feel more comfortable. Like what helps you sleep at night is a
Yeah.
number to aim for. But for most people, it's going to be like that 3 to 6K range.
3 to 6K range.
Yeah.
Now, I think that that's really like extremely reasonable, especially in today's economy, with just like you mentioned with the amount of bills and such. Now, you
Hmm.
also mentioned too, let's say, for example, a person says, okay, I want to save $3 to $6,000,
Hmm.
but where should they save this money? I know you mentioned like a high yield savings. Some people have
Hmm.
never heard of that before.
Hmm.
What's the difference between like a high yield savings and why they should consider that
Hmm.
versus a traditional savings account? What's your take on that?
Sure. And I do want to clarify with the 3 to 6K, or
Yeah.
whatever the emergency fund I'm referring to is your starter emergency fund. So
Mm,
before tackling the debt or like heavily focusing on on anything else, because then you'll
Yeah.
probably want to save more than that. But yes, a high yield savings account that gains interest. So you put money in. These are typically with online banks. There's like
Yeah.
Marcus, Ally, Synchrony Bank, many options to
Yeah.
choose from. So you open an account, you put money in, and then on a monthly basis, you're going to be gaining interest. And right now, about like 3.75.
Yeah.
It's going to continue to drop a little bit, and that's completely normal. It may go up, it may go down, but you will not lose money in this account. It's not possible to lose
Mm,
money. You want to open one that doesn't have fees. It's
mm,
FDIC insured up to $250,000, so your money's okay. And this is much different from a traditional bank because if you
yeah.
have your savings account with like Bank of America or Chase or Wells Fargo, you're gaining like 0.01% interest. So basically nothing. Your money's not doing
Right.
gaining any money, unfortunately.
Right.
So it's okay to still have that, or just like your
Yeah.
main checking account with those banks. And then the high yield savings account will allow you to gain a little bit of passive income. So it'll be a few bucks each month that's added in there, and you can just continue to save it or use it as you need to.
Okay. Got it. Got it. See, listen, we are getting the information we need from Layla today. Okay. So, man, you know what's crazy is that it's so many videos you've made about a lot of these topics, and you've
Mhm.
condensed like so much of this into like, it's like you guys just got like 10 to 15 videos worth of information. I'm just
Yeah.
letting you guys know.
It's a lot. Yeah.
Okay, let's talk about, do you ever go into and we don't have to go that deep into it, but like let's say like a basic budget. Do you have like a, because everyone's different. Someone says 20, 40 this, then 20 this. Do you have like a budget that you would recommend for people like if they aren't good with budgets, or or they don't have one at all?
So I love budgeting. I budget every month. That's what I still do to this day. You've got to find what works best for you. So I don't have a one size fits all,
Yeah.
but I think the most important thing is first start with tracking your spending. So
Mm,
literally, either you need to go
those
back.
door dashes.
Those door dashes, yes. So go back and look at the last 3 months of your spending, literally write it out, type it up in a spreadsheet, whatever you need to do, and see where you're spending your money. Or you can track your money for the next month, for the next 2 months, and see where your money's going. And then from there, with that data, that's really important to just have some data on your history and how you spend your money, because then you can make a realistic budget.
Yeah.
And I really just like to use spreadsheets. So there's plenty of apps to use, but I just use Google Sheets. It's free, it's easy. And I basically do a zero-based budget. So you put your income and then list all of your expenses. And the goal is to get all of your expenses to come. If you subtract all of your expenses from your income, you'll basically get it to zero. So all your money
Mm.
is assigned somewhere. And of course, if you are going negative, then you've got to cut something out or make more income, that type of thing.
Got you. Got you. Now, I do know, obviously, you have a budget, and things of that sort. And obviously, we recommend budgets as well.
Mhm.
Saying that to say, do you obviously, because I know it's about obviously saving, money, and obviously, maybe making some investments, paying bills and things of that sort. What about some fun stuff? Like, what about when we talk about vacations and stuff? Like, do you ever talk about that, Layla? Like, it's like, okay, this is the goal. I want to go here. I want to do this. What if you
Mhm.
have like that big ticket that you want to prepare for? Do you have any advice on that?
Yeah, so I take a very I would say chill approach to
Okay.
budgeting. With my clients, I like them to prioritize things that they want to spend their money on. When I was paying off my
Okay.
debt, I did travel, I did buy personal things. Like it's okay to go out to eat, but
Yeah.
within reason, of course. You
Mm,
also have to think about what it is you truly want. Like
yeah.
how important is it for you to be debt free or to
Mm,
save money, to invest money compared to going on a trip. And the trip may be top priority, and that's fine.
yeah.
So I do recommend trying your best to save for those things, like create a sinking fund, which is just a on top of your emergency fund, you have a separate savings that you save to on a monthly basis, or you really
Yeah.
focus on that heavily, and then book the trip. I don't want people to go into further debt for that, but I think it's
Yeah.
absolutely okay to enjoy life and spend on what you want to while you're tackling those financial goals. Because what's the point of living otherwise? So
That's right. Yeah.
yeah, yeah, just
And that's,
plan for it and be reasonable.
yeah. And
Yeah,
and that's why I want to ask that question, because we talk about obviously saving money, obviously spending money, but like you said, that's the whole point of doing this, is to
mhm,
enjoy,
yeah,
something. I don't want people to feel like, they're just saving and saving, and but they can't ever enjoy it because
Mhm.
once you're gone and your kids they have it, they're gonna blow it, you know. So,
Yeah.
but but no, seriously, that's what I want to make sure that people know. It's okay to have that a part of the budget too. Yes, you pay your bills. Yes, you pay your obligations, but it's
Mhm.
like, hey, don't forget about that trip. Don't forget about yourself, you
Yeah.
know. So otherwise, this stuff won't be fun at all, you know.
Absolutely.
So
Mhm.
that's good. That's good.
Yeah.
Listen, guys, this is why we brought Layla here today to get us back on track. Okay,
Mhm.
2025, a lot of just prices keep going up and things of that sort. But with a strategy like this, if you all take action on the information that she just dropped today, then of course let us know that in the comment section. Also, let us know if you guys learned something new, and of course, let us know if you want us to bring Layla back. And before we wrap up, Layla, is there anything you want to leave with the audience before we get out of here today?
Just be consistent. I think that's always what I come back to is consistency. No
Yeah.
matter what in life, that applies to everything, you know? If you're trying to lose weight, if you're trying to get strong, if you're trying to make money, pay off debt, it's about being consistent. You don't have to be perfect, but just small things add up, you know? So even if it's just a extra $5 payment that you're making each week, like that is huge in the long run. So just be consistent and don't give up.
There you go. I needed to hear that, especially about the weight loss. My wife, she cooks so good, I can't. It's so hard. So anyway, okay. Thank you so much, Layla, for taking out the time again today. Let us know in the comments, guys, what you picked up as well too. All right, but thank you so much, Layla. We greatly appreciate your time.
Thank you. Appreciate it.
Thanks for watching, and we'll see you guys on the next video.